Alright YouTube, welcome to another video. Just want to do a market recap of price action that happened on Friday. I do have already a video of the trades that I personally took and the P&L and my mindset on how I view things and etc. But I always do over the weekend kind of like go over price, take notes, and really try to understand what could I have done better, how much more patience could I have shown, how much more grace I could have had on myself, and just really use it as an opportunity to learn while the markets are closed. I do also look at crypto, but there is a time where you should really look back on the day and really self-reflect on what you could have done better. So I think that is something that is very important if you want to continue to grow as a trader. Moving into 2025, I think everyone that is serious about leveling up their ability to look at the markets without having your heart beat really fast or having anxiety or anxiousness on missing a trade or wasting a day, just really be able to look back. And I think that training, when you look at the day after the fact and just remind yourself, if I would have been more patient, I could have taken this entry. If I would have been a little more patient, I could have taken that entry. And the end result is patience. How much more patient can you be? How can you deny yourself the dopamine rush of entering in that trade? And I think that's something I am working on as well. I do love to jump into the trades either prior to open or right at New York Open to take advantage of that volatility, because of my aggressiveness of using a really tight stop loss and a really aggressive trailing with my risk management. So going into the day, we're pretty much going to start at 7 a.m. and I do notice on my channel my quality of my videos for some reason are not as good as they should be. So I am going to try to zoom into the candles a little more. So we start at 7 o'clock and we do definitely want to look at our M15 like we're told. So I see that, okay, sorry guys. So our kill zone is here right at 7. So prior to that, we had a low here. We had a low here at 3 a.m., a low here. But this low being at an actual hour, I see that here. So right at 6 o'clock, let's start. Right at 6 o'clock, we see we had a low here. And we have this low here, this high. So we would be coming into our 7 a.m. with that low marked out and that high marked out. You can also have done this low here as another point of interest. Now, based off this order block here, or sorry, breaker structure, I am just taking into consideration that we are in a bullish price action, or yeah, price action is bullish. So even without having any information from anywhere past this chart, these candles here, and I only have this to determine where our projection or our market structure is going, I just would mark out that this low as well, this one. These are the only two I would really be thinking about going into 7 o'clock. So let's drop down to the 5-minute. So that was that low and that low. And as we got more detail, we enter 7 o'clock and we immediately run low here, creating a breaker structure to the downside after this market structure shift. Market structure shift all the way down, came up, came down again, giving us that market structure shift and also liquidating. So if we were already determining that our price action was going to be bullish based off that one order block here on the M15, I would assume that we are manipulating to liquidate, because if the higher time frame order flow is bullish and I do get some type of liquid like market structure shift to downside, I won't automatically assume that we are going to completely reverse down. I would first see, okay, so this may be a market structure down to the downside, but I would definitely have to see price action go down, continue back up, and then give me more confirmation that we were going to continue to move down. But that did not happen. What happened was we moved down and then we came back up, and this is where patience goes into play, because you could have immediately see it tap into this fair value gap, sweep, kind of consolidate and attempt to try to take another short here, and then price came up, wicked again, and all these rejections here. If you're the type to draw out, and I see many traders do this, they draw out their fair value gaps and they just continue to see rejection, and then by the last rejection they're like, there is no way price is going to continue up, let's go ahead and short this. And then they'll get in short right at the last moment like this, and they would just be destroyed, whether they put their stops above that high, whatever the case may be. So I think that is something to take into consideration. But like I said, just because I see a break structure to the downside does not mean I will automatically assume we're going to start pushing down. But if we expressed our patience, we would have saw a market structure to the upside, as well as you see something like this as well, market structure shift to the downside, then we push up, we come down, but we never break that low here. Then we push up again, and instead of breaking that low, we break the high. So it's the market structure shift, break a structure, and this is also a market structure shift to the downside. So this market structure shift, after seeing this, just told me that this was the liquidation of sell side before they wanted to continue moving upwards. And we didn't get that confirmation that this was just sell side liquidation until we got the market structure shift or breaker structure first, market structure shift on the higher time frame as a swing point. So we get here, we see the liquidation here, we see consolidation, and then we see our push up. Now in this case, we would draw our discount here after the raid, and this is the 5 minute. So we did our analysis on the 15. We saw what was going on the 5. Then we jumped down to the 1 minute. And also we had our, should draw OTE. We tapped in right at the 70, as you see here. I know these numbers are super small, but we barely wicked. Let's just see if I have it 100% accurate here. So right at that high, and then we'll go down to the low, and we'll fix this to be right at the low. So it tapped in, wicked right at the 7.705, came back, closed above this candle here, and then we started to push up. We have a breakaway gap there. We have a breaker structure to the upside, market structure shift to the downside. So this would have been a bearish breaker. I believe. Nevertheless, so we break above this high at 920, and this is where we get our first entry into a fair value gap after our market structure shift. Would have been a perfect entry right there. Stops above below this M15, so it's an M15 fair value gap with a 1 minute fair value gap overlaying there. Then you could have targeted your 1 to 2, and you would have been able to, as you see in my video of my recap, you saw that I entered somewhere up here and I just got wicked out, and then price went away. So I just, after getting wicked, I just entered into my scalping protocol, and we took the money anyways. We took the money anyways because we weren't going to just let it, we weren't going to let that slide. But if we were able to just take a deep breath, be calm, we would have understood that there was going to be another opportunity to enter into long positions in our favor, as long as we waited for another fair value gap entry. So this is the trade that we missed, obviously, because we were a little higher than expected. And if I would have followed the indicator alone, I would have been perfectly fine on my first entry. Normally I target 150 ticks, as you guys see in my videos, and stop loss is normally around 50 ticks, so that would have been my trade there. Second entry at 9 so this was 9:30. That's when we got the wick. Then we got our second entry here into a fair value gap only 5 minutes later exactly. So even if we missed the first entry, we could have tapped into this fair value gap as well here. That would have been another winning trade for me there. And that's what really, for me, I do like to stick with a set risk to reward ratio. Although sometimes you will see me just try to run for some more with my risk management set. But that would have been a good entry there. As you see again here, it tapped right into this M15 fair value gap to go long again. But I wouldn't have traded this. I know we have a whole bunch of IFVG traders that would have taken this trade. Would have been an amazing entry for them there. But me personally, I would have wanted to wait for another market structure shift and trying to go to take another long position, because I was definitely bullish on the day. We did get an entry here because there was a small, if you guys can see it, there was a small fair value gap here, right there. So the indicator indicated a rejection. Price came in, came up, rejected, then started to come down. But I don't have the indicator to detect fair value gaps visually this low, although it will still give you a signal. It'll still give you a signal there that there is rejection off of that fair value gap, which can be changed inside the settings. So just in case if you're wondering why there's a random signal there, that's why. This price action here would have been kind of difficult to trade in my opinion. If you're just looking at the 1 minute, a lot of people don't have the access to the second chart, so they would never even be able to utilize this indicator to its max potential and really be able to see the market structure shift inside of here and the possible entries. Like for example, let's go down to the 15-second right now and show you that there were entries there. And this is just to prove the point that there's entries everywhere. Always, there's always an opportunity to get into the market as long as you're following order flow. See right here, this is the whole curve that we were talking about, and if we zoom in very closely, here is the market structure shift. Like I said, I know it's difficult to see because of the quality of the video, but you guys are gonna have to take my word for it and or join the Discord. If you do want to or interested in joining the Discord, make sure you just like, subscribe, leave a comment in the description so I can get that sent over. Also follow me on Instagram. That'd be the quickest way to get a hold of me for access to the Discord. So on the 15-second chart, we did get that market structure shift here after failing to take out this low. As you guys can still see, we are inside the M15 fair value gap. So we wick, we reject, we wick again, we reject, and we don't even make it to break this low here. So we get that market structure shift and we get that fair value gap entry. And because even if you did take this trade here, your stops would not be that bad. Well, technically it would be pretty, even at 100 ticks, it's not that bad. That's like what, 500, and if you're risking 1% on the 50k account, that's 1%. So there was your entry there. If you still wanted more confirmation and you were able to express that patience that we talked about earlier in the video, you would have saw market structure shift and then another market structure shift to the downside. Market structure shift to the downside. Another push up. And this is where you just have to follow market structure. So either one or two things at this point here on this leg, either one or two things is going to happen. This is going to fail to take that high, and it's going to stop right here, and it's going to reverse. We're going to end up here, and at this point in time, we're just going to have to wait to see whether or not it takes that high or it comes up and takes this high. And what did it do? It took this high instead, which gave us our next market structure shift here. So at that point, we got our candle here breaking that high, also creating another fair value gap. Price came in, indicator gave us another fair value gap entry, and this would have been a more favorable entry at 50 ticks. And then we could have target, well, this one we could have targeted all the way up there. Now, how would we have known that we were going to go that high? At this, you would have to find some type of higher time frame target. But look how many entries or add-ons you could have added onto your position on the way up, scaling into that position on the 15-second chart. So with that being said, don't let anybody tell you price is choppy. I don't know where price is gonna go. The market conditions are not good. This is low probable. Even ICT says it himself. Like, a lot of people are just they can't really explain where price is gonna go. They really don't know how to explain the way ICT explains price because they really haven't studied it that much, and they're just gonna explain it away. Like, I can't tell you where to go in a seek and destroy situation, or I can't tell you what's gonna happen. I have no idea, or I'm just not gonna trade the low probable conditions. Like, if you go down to the 15-second chart, you'll see just like this. On the 1 minute chart, it would have been we saw no entries, no opportunities to get in on this nice smooth move up. But on the 15-second, using a higher time frame PD array rejection using market structure shift, seeing the combination of a break structure to the downside, market structure shift to the upside, giving us a breaker, and just following order flow, waiting until we get that fair value gap confirmation from the indicator. You can also do that manually, as you see many traders do. They just draw their fair value gaps out manually. Can they do it super fast on the 15-second chart? Probably. I've seen it done. But can majority of traders do it on the 15-second chart? Be fast enough to do this in 30 seconds? So guys, tell me this. You're gonna tell me that within this candle, 15 seconds, 30 seconds, another 15 seconds, 45 seconds, you're gonna be able to recognize that this is a fair value gap. On top of that, while you have multiple charts open, then see price come into the candle. That's another 15 seconds, another 30 seconds. And then within these 15 to 30 seconds before it leaves, be able to make the decision of, do you want to open your account up to risk based off this trade? No. Like I said, I've seen it get done, but by very professional traders and profitable traders. But for me, I would just have to watch this get played out. Just wait for my entry. Higher time frame, PDRA. I see price reject. I see bearish order flow as I continue to see breaker structure and market structure shifts to the downside. Then I get my first sign here of a market structure shift. It liquidates again. Gives us another bearish market structure shift to the downside. Bearish market structure shift. Breaker structure to the downside. And then our second market structure shift to the upside, giving us a breaker here. Price comes up, comes back down into the breaker. Now, you could, like I said, you may have probably entered up here, but based off if you have the patience, if you entered here, you would have a little bit more of maybe 100 tick stop loss if you were patient and saw that, waited for another market structure shift, or wait for price to actually leave the higher time frame PD array once again. You would have saw this market structure shift and another fair value gap entry, and you could have taken it all the way up there. Like I said, don't let any YouTuber out there, guru, tell you that there is low probable setups. Now, I say this to say, if you have a specific trading model and it's not presented, that's probably the only reason why you shouldn't take a trade. But personally, with this indicator, I have not seen not one ICT setup that does not present itself in using this indicator personally. Whether it's turtle soup, silver bullet, all of it has to do something with a fair value gap, a breaker, market structure shift, just the core components of a entry model. I've integrated those, just those core components. This indicator is great and it's an amazing tool, but it's not needed. But I can argue that this thing is amazing because like I said, I have the advantage on the 15-second chart that not any trader that I've seen on YouTube have when it comes to being able to spot the setup very quickly and see it tap into a fair value gap or breaker, whatever the combination is, and be able to execute within seconds in order to capitalize on the move. So we just have to be able to be faster than the next trader. Not faster by catching up, not faster by full porting or getting to the first payout first, or catching the FOMC candle. But we want to have the edge. ICT says indicators are like putting lipstick on a pig. And you know what, guys? I want my pig to look the best. If there was a competition like down south on the best looking pig gets the reward, I want to get the reward, guys. I have no shame in saying I want my pig to look the prettiest. So if there has to be lipstick on the pig, metaphorically speaking, because I don't agree with testing makeup on animals. I think that's horrible. So guys, don't try to like mix my words up or anything. That's not what God made animals for, to test makeup and stuff on them. So this is just metaphorically speaking. I want my pig to look the best. I want my pig to get first place. I want to be on the top spot on the payout billboard. I mean, not really, I can care less, but to be up there would mean that I've done very well, and that's something that I think we should all strive for. Like I said, many traders have done great work without an indicator, without even this indicator, and so it's possible. So don't think that you need this, but to have it is just another tool in your arsenal, another whetstone to sharpen your edge. And we all are looking for that edge. And I humbly say, there was a time where I wasn't the most accurate with my markups, and that really affected my entries. But now, with this, I'm able to do amazing things. So, lately, you guys have seen that I have been scalping, so I haven't even been able to demonstrate me taking a trade like this for you guys. But soon I will be demonstrating these type of trades that I'm describing to you and showing you now. I have been taking 1 to 3s, but you guys haven't seen that be executed on a lower time frame. But like I said, price is fractal. If I was able to get a 1 to 3 risk to reward at a turning point or a pullback, that means that on the lower time frame there was a market structure shift and a fair value gap entry. There was. So I can take this trade on the 1 minute and then just drop down to the 15 second and then show you that it happened to be in alignment with one of these type of setups, taking it all the way up. Wherever I entered, it would have showed that I entered somewhere here. Maybe if I had some drawdown, I believe in the Asia extras portion of the last video, you saw I did like a 1-to-1 scalp, and price went all the way down to like a tick or two from my stop loss, and then goes to take my take profit. That'd be an entry, something like this. So with that being said, there's always an opportunity every single second of the day. Price is only gonna go up or down. It's either gonna go up or down, guys. Up, down, up, down, up, down, up, down, up, down. It's just about timing it. It's just about timing and just stop loss placement. Like I said, we're on the 15-second chart. Look at this. Price came down. We are just continual bullish. We got a higher time frame order flow. So this tells me this is just liquidation. Then we get breaker structure, market structure shift, telling me there's a breaker there. If you guys want better quality, just come and join the Discord. So breaker structure, pull back, doesn't break the low, doesn't close below. Oh, it does actually. So this is a liquidation as well. Price come back up. There's no close though, so it's just wicks. Breaker structure, pull back, breaker structure, pull back, breaker structure, market structure shift. So liquidates all this liquidity down here. Then we come back, and we don't assume that we're gonna drop lower until we start getting internal breaker structures to the downside, and eventually it would turn into a higher time frame swing market structure shift, as you can see here. So this told us, this is why we don't assume, we don't try to take shorts prematurely just because we saw this big. This is what sellers that are impatient do. They'll try to take this short just because they saw this major move down, not realizing that price is going to liquidate buy side one more time. Until you see multiple, not just one market structure shift, this is why confirmation in your trades are important. Until you see multiple internal bearish market structure, then you can start to see and, you know, start to switch your idea of price action from bullish to bearish. If not, all you're getting is just liquidations to the downside. All these market structure shifts are just liquidating sell side before it continues on the higher time frame direction. So you would have to, guys, you would have to see, internal structure give you bearish price action, and then eventually take the swing, and the swing structure turns bearish as well before you guys start to consider doing short positions. But we never get that. We get buy side instead, a break of the high, which is our first market structure shift. And then what do? We get a fair value gap, also value imbalance here. I don't really look at volume imbalance, or I don't take those in consideration. But if you are an astute student, you would even notice something like that. This is a 15-second chart, so would you even notice that? Probably not. But there are, like I said, amazing traders out there that are very good at spotting even the most minor details in price. So you could have taken that for 1 to 2, targeting this swing point here, which is probably just the 1 minute high breaker structure. Or you could have just continued to put price wherever you want and trail it. Eventually we do get that market structure shift to the downside, breaker structure to the downside, and then at this point, after that breaker structure, delivery from this fair value gap here, and then push down, retrace up. This retracement did not reach this high here, and again broke the low, giving us a breaker structure. Then you could have potentially taken a short here, targeting would have been sell side liquidity on that end, giving you a 1 to 2.8. And as you can see here, because of the settings that I have, it doesn't print all the fair value gaps, because I don't want to be too distracted with every single fair value gap there. But we do tap into this fair value gap, that's why there's a signal there. we do tap into this fair value gap here. That's why there's a signal there. And then eventually we reached that sell side liquidity. And once we closed at that sell side liquidity, it turned from sell side liquidity swing point into a market structure shift on the higher time frame to the downside. And then what do? We get market structure shift to the upside, because guys, you guys know market structure shift by now. I'm not gonna try to talk to you guys like you guys are new traders. You guys know market structure. What happens after we get a break of structure? What do we get? Pullback. After another break of structure, what do we get? A pullback. So just pretend this is higher time frame swing. So what do we get after this market structure shift? We get a pullback. And what is involved in a pullback? First, before anything, first sign of a pullback is that market structure shift. So market structure shift telling us that we are now in a pullback phase, coming down here, coming up. So we are anticipating a pullback after this swing point here is taken. And as you can see here, it does tap into this fair value gap there. We wouldn't have traded off this fair value gap. We never extend our fair value gaps unless it is a higher time frame fair value gap presented in this area here. But we don't use personally, and anyone that uses this indicator or is learning from me, I would not tell them to extend any of these fair value gaps, because I think this indicator is more useful when we are taking drill entries, which is a quick tap in and push away, tap in, push away, tap in, push away. We're not looking for the whole swing back into the move, even though taking the whole swing will definitely get you the longer move down instead of the quick legs. So it really all depends on how you want to trade. I'm not going to tell you how to trade it, but in the settings you can extend these fair value gaps, or just switch your higher time frame fair value gaps to the actual chart that you're using and just have those extend so you can see price come back. But for the sake of this illustration, I'm just showing you how to read the market, the market structure. So like I said, we had market structure shift, higher time frame here. So we're expecting a pullback. We get our first sign that pullback is going to begin with this bullish market structure shift internal. Then we climb up. We get a first market structure shift, so tricking traders into selling now, but we just squeeze them out. That's why you want multiple confirmations. Even if you did feel tricked into taking this market structure shift here. Hold on, give me 1 second. Let me try to fix this so you guys can see it better. Alright, hopefully that's a little better. So we got a break structure to the downside, market structure shifts to the upside. So right here we got another market structure shift to the downside, so it's making people believe that we are now going to start pushing down. But like I said, this is why you want multiple internal market structure indications that we are going to continue down, and it's not just a trick. So if you would have tried to go short here, obviously one, you shouldn't have, because there wasn't this would have been first breakaway gap, and then you would have gotten your fair value gap entry, bearish entry here like this, but you didn't. So there shouldn't have been no short trade in here anyways. So that's that. So we continue up, get another market structure shift to the upside. Then we start to tap into this, and then we start to get our rejection. Now that we got a bearish break structure to the downside, you could have been aggressive and take that short there, because now we're in alignment. But like I said, if you don't wait for that second confirmation, like the breaker structure, then this is considered aggressive entry, and you take that at your own risk. But if you did wait for a second confirmation with the breaker structure, you would have got your entry here, yet your stop personally would be at 50 ticks, like I have it here, and either 1 to 2, 1 to 2, 1 to 3. I do 1 to 3s, so right around there. So you got your breaker structure. So like I said, we waited for the higher time frame swing breaker structure. We saw the pullback, which is this move here. Then we're waiting for internal market structure inside of this swing point here. I hope you guys can barely see. Inside of this swing point here, in order to tell us we're right on the sell side of the leg again. So then we saw the market structure shift. We saw the pullback into a fair value gap. But internally, we waited for a market structure shift and a fair value gap to give us more confidence that we're pushing down into this leg to now take this low. And that's what we did here. We had the market structure shift, had the breaker structure, and then we took our short here, taking the low here. Price came up. What do we do when we have a breaker structure again? When we have a higher time break structure, we get a pullback. We got the pullback, and then again, market structure shift telling us that we're in the pullback phase. Market structure shift back to the downside, telling us that we are back in alignment with the higher time order flow. And in this case, we have a market structure shift setup here, which is a breaker. But let's just make that super light. So that's a breaker. And then inside the breaker, after the market structure shift, we have another aggressive entry potentially for a 1-to-1 if you wanted just to target that swing low following order flow, or another 1 to 3 there. So that was another entry point there. And then at this point, market closes literally at 4 p.m. So market is closed here. And then the day starts again, which is actually market closed over here. So market will open here on Monday. Today is currently Saturday night. Five minutes to 12 in the morning. 1 in the morning, 12. So it's about to be Sunday in 5 minutes. So yeah, just those were all the possible entries, even on the 15-second chart. So like I said, guys, we could have even gone through all this price action if you guys wanted to, but you guys get the picture. You guys understand by now, right? You guys know. Just amazing, amazing opportunities all day. I don't know, we really went into a rant, but like, how can you miss, you know? Like, if you're not just being completely, like, playing like games, like completely, like, not taking this serious, and you're really, like, you're really taking this serious, like, you really can't miss. There's really no way that you should be losing money in the markets. So that is the end of the video, guys. I hope you guys were able to learn some things, take notes. Like I said, I'm still a student as well. I hope you guys did get some insight. Like, subscribe to the channel. Leave a comment if you guys are interested in joining the Discord. Follow me on Instagram. All the links are in right below my title of my name and the link, beacon link of the YouTube channel. And I'll see you guys on Monday. God bless you guys. And with that being said, I'll see you guys soon.